right. Now, it's been a long time, and I had just been busy at the other job, and I just wanted to come on and just kind of say, hey, and kind of give everybody a perspective. Look, here's my account. Like I don't have anything. I have a couple of things. Like there's a couple of trades here that have been working out, but I don't have anything that has worked in this sell-off. And I just wanted to come on and like show everybody. And look, I don't have any of these trades that I have on are not uberly bullish or bearish. They're all volatility plays for the most part. And when you have the VIX, where is the VIX? When you got the VIX at 22 and you're a volatility seller, this is the dark side of selling options and only selling options. When you only sell options, this is kind of the, worst case scenario that can happen for you is now you get stuck in these elevated volatility plays, right? Because all these stocks had elevated volatility, which is why I had done the trades that I did, most of which are delta neutral. And maybe in the last couple of days, doing things that are delta neutral, but slightly like delta positive, but slightly because they're calendar spreads. But I just wanted to share this with everyone because, look, there is no, and I guess the point of this is that there is no one strategy that works all the time. You kind of have to be a chameleon. So, if you were to look at my account now, look, for the year, I'm down $5,000. It's not that bad. I mean, I'm actually not that upset about it. I actually would expect it to be worse. I actually expected it to be a lot worse. I figured it would be, I figured it'd be 40 or 50, even 60,000, which it was back in 2022, if anybody remembers. What happened there, we had a massive, it was about a 20% correction, and it took about 6 months. It took about 6 or 7 months. I ended up losing close to, I want to say it was probably closer to 70 or 80,000 during that time. And is it because I did anything differently? No, it's because mainly I'm not, back in 2022, I was probably over allocated in some of the materials and the basics than I am now. Now I feel like I'm a little bit more diversified, so I'm not really getting hit. But now if you couple this with stocks, right, because these are my options trades, and you couple this with what I have in my stocks, I'm actually not doing that bad overall, right? And you start stacking this up, and it doesn't really look that bad. Now, there's some that are actually really bad, like, Tesla has gotten hurt. The bonds really have never turned around. I've been very, open about my bond position that I've had for almost, I think it's going on closer to 2 years. I think it's a year and a half, but it's been definitely longer than a year, and that hasn't worked out. We haven't really seen any real rally in the bonds that I would have expected to see at this point. So that's kind of a loser as well. But you could see that from this, like when you start stacking it up between options trades and stock trades, it's not that ugly, man. It's not that ugly. And I'm not trying to say like, oh yeah, look at me. But what I'm trying to say is, look, I've been doing this a long time, 30 plus years. Probably, I think it's closer to 36. I keep forgetting I'm almost 60 years old. I've been doing this almost 35, 36 years. So I've been through a few rodeos here. And I guess what I'm trying to say is that, look, I was in no position to know that this thing was going to completely. There's never that bell that rings, right? And what's funny is you have a gazillion assholes now that are coming out, right, and will say, "Oh, I sold all my stuff back in November," or "I sold all my stuff in January." It's like, no, you didn't. No, you did. All your stuff. Would you have $5,000 worth of shit? Like, you have $500,000, $1 million, money in your 401k, whatever, and you have a lot of money out there and you haven't invested. You're not fucking selling it. And if anybody has half a fucking brain in their head, you're not just going to fucking sell it all. Because what's going to happen, you're going to get taxed up the ass, especially if you have huge gains. Right? So you're just going to go and just, create that huge tax event, and then you're going to be okay with that. And let's say you do take, $500,000 worth of, or $200,000, $300,000 worth of capital gains. And let's just say that most of them may be long-term. You're gonna be happy paying $28,000, $30,000 in taxes. And for the money that you paid in taxes, was it worth taking the gain? And so when your gains were maybe, 50 or 60, you're only really netting 20 or 30. Like, so who won in that situation? So I don't want to hear that. It's like, shut up. Just go away. Don't even because I know you're full of shit. That's the other thing. So anyway, I just wanted to kind of share that because I've been kind of itching to get back and doing the broadcasts. I said that about a month ago when I started up again. And I just haven't had the time. And this morning I was kind of sitting here and, scrolling through social media from time to time at night, which I do for entertainment purposes, because I do get a lot of entertainment out of, especially the investment gurus on social media. I honestly think it is the most entertaining stuff out there. And what I'm finding, and I think it's actually incredible, the investment community at large overall has finally, I think, caught on to it. There's still those handful of folks out there who, are minions to whoever the guru is. But I think overall, because I look at the comments, and no matter who it is, and I don't want to name names, but like some of even the bigger guys who come on and even call other people out, I'm even looking in the comments there, and like just 6 months ago, there wasn't that much negative stuff, and now you're actually seeing, and the people are just like, dude, it's like, why don't you shut up? You're calling other people out, and you do the same garbage. So go away. And then, you're still charging $200 a month to trade along with you, and you're not doing any better than anybody else. And it's funny. I just think I think the glory days of the whole trading influencer marketplace is coming to an end, and I think possibly this sell-off is partially the reason that you're probably going to see a lot of these people kind of drop off. And it always happens, and I've been through a number of cycles, and, we had this big drop off before 2020, and then the pandemic hit, and then you had a big influx again of influencers because you had people coming into the market that weren't in the market, and it was, that was like shooting ducks for about 6 to 8 months, where literally if you just bought calls on anything, that was the top 10 or 15 stocks in the news, you made money. And you looked like, and Discords and all these things were, but that slowly kind of went away. And then we had 2022, and that kind of wiped out a good portion of them, because a lot of them I would see on the platforms, and then all of a sudden you weren't seeing them anymore. And then you're like, I went and looked up a couple people who were pretty influential, and a couple went to jail for fraud. No, a couple didn't even do. A couple were like doing construction now, and it was like, ew, really? Like, look, I don't begrudge anybody to do construction. I did construction. It's a great. I'm just saying, you go from trading stocks in a so-called guru, and now you're out on, now you're shingling roofs. I mean, it just tells you what like kind of skills you had in the first place. You should have stayed to shingling roofs. You're probably pretty good at it. So anyway, that's all I kind of wanted to say here, because I don't have anything to say here as far as like what to do. I've been buying sporadically here all the way down the last couple of weeks. But what I've been doing is I haven't really done a massive amount of things, but I've been kind of laying down, I think, a pretty good foundation out in time. And if you notice here, I do have some stuff in May, April, March, but mainly I'm going out to December. Some cases I'm going out to next year, even January. I did some more stuff out here in the IWM out in December. Same thing with the SPY, the SPY. I'm going out in time. I did some December. Likely what I'm going to do today, I'm probably not going to do anything, especially since we're up. I'm not going to go and add on to anything. But if we do have another kind of setback and pullback, my next step is to go out to even March of next year. And so what I'm trying to do is I'm trying to get rid of my tunnel vision and try and catch this bounce in the short term and kind of like change my whole approach that I'm going out in time. And it's not just in this, it's in everything, in stocks in general. And if you look at my positions and you look at days to expiry, I mean, this is where I'm at. I'm actually going out and I'm slowly starting to throw stuff out in time. Like here, Costco, I'm out 100 days. And most other things here, these are all 30s, but anything new, I'm going out. I'm going out in time, and I'm going to try and do myself a favor and get out of the short-term play here, because I think you're going to get cut up. And that's just my opinion. I think we're going to be in a market like this probably for another couple of months. I don't think it's going to last much longer than that. I mean, I've been telling my family I have this feeling by May, June even, second quarter, or even the start of like right before the start, in June or right near the end of the second quarter, I think things are going to be kind of normalized and back humming again. I don't know if we'll be back at new highs in the market, but I think we'll pretty much stabilize at that point where you'll see volatility probably under 20 likely, and have us have like a more normal market where we're banging out 20, up 23, 24, down 40, up 70, down, and we're not going to have these huge, massive intraday moves. Again, that's kind of just where I'm trying to put my mind at, and that is why I'm going out. And the reason I'm doing that is if you look out, and obviously the longer you look out in time, the less volatility there is. But volatility does almost collapse out. Look, we're up in the 30s here in March, and we are literally down. And I talked about like overall volatility. Here's this SPY. When you get to June, we're down 5, and then out in December, where I'm going, we're down almost near 20. And so I think that's critical to try and build yourself a little bit of I'm not going to say bulletproof portfolio, but maybe, a little bit more strategic trades than just trying to catch this quick bounce that everyone knows is going to come. But if it doesn't, if you're in some of the shorter stuff, you're gonna get burnt, because they're not going to come in. The trades are not going to come in, and you're going to wind up, you're going to expire, and you're going to wind up losing money. Where if you have some time under your belt, you can kind of ride it out a little bit. So anyway, that's kind of where I've been looking at things. And then, more recently, I'm looking at a couple of stocks that have stayed on my radar for quite a while. And that is Merck. And you can see I have a position here in Merck, and I'm kind of rolled the dice on this one for a while. And I also like Freeport-McMoRan. And it's companies in two different sectors. And what I'm doing with both of these stocks, I've already done it with Merck, but I'm going out to December and I'm selling puts. And to me, it doesn't matter what puts you sell. In my case, I did a 95. We have no bids on this. I think their Tasty Trade's having problems with their data feed because when I got in this morning, literally everything was all messed up. But anyway, I'm short a 95, 85, so pretty wide one. I can't even put it up here. But it's just barely got back in the money when I did. It did about a week ago. So I took some heat on it. I'm doing the same thing with Freeport. Now, with Merck, I would do the same thing. I would either do December or even January and sell any puts 95 and below. And I think it's a good trade. Merck has actually got hammered a couple of weeks ago. It went down as low as $82, I think. If my memory jogs me right. Yeah, went all the way down to close to 80. I was close. It's 80, 81 and change. And you can see it's been kind of a sloth all the way down, but I do think we hit the bottom here at 82. And entries in here now up above 90, I think we're in a good spot, a good space. Now, is it going to go back to 140? No, I'm not going to tell anybody that. But you got a $95 stock that I think has easily potential to get back up to 105 to 110 in the next, 6 months easily. And it may come sooner than you think. But I would go out to there, and that's what I'm doing in Merck. And I may actually, if it's down today, which it doesn't look like it is, but when it does pull back again, I will actually add to that position. And then the one I'm going to add to today, I'm hoping it's today. I don't know if it is. It's up. So I don't like to do anything when something's up. So I may actually hold off and wait for this one to get a little bit of a pullback. Is Freeport-McMoRan. And that's another one that I'm going to go out of the money, not out of the money. I'm going to go slightly in the money on these and say, sell something with some beef to it. And I like the 40 puts in December. You get $6. If you can do them naked, even better. These spreads, I mean, there's quite a bit of spread here, but again, the market's closed, so I don't really want to quote this. But this should tighten up a bit. But I do like the 40 puts here. It gives you about 54 deltas. That's about 54 shares. And the margins in general in Freeport-McMoRan are relatively good. I have this in my IRAs. I did this on my trading account. You'll show you the real margin on these. As you can see, only $800 to get 54 shares of leverage. And to me, you kind of have a 50-50 shot, 54% pop. But, you're out in time in December. And I do like this stock here. And those are two that I'm looking at right now, not only just from a fundamental basis and a technical basis, but also from a volatility basis. They happen to be at the top of the list in the volatility leaders from high option volume stocks. All right. And again, there's no magic one here. Look, if you don't like December and it seems to be too far out for you, then perhaps go back to June. Go back to June and then maybe don't do a 40, do something that's closer to the money. The important thing here is that what you're going to want to do is you're going to want to get some positive delta in here on your put sales. Calls are not going to be the right choice because volatility is too high in here. And so this is one of those situations where when you say, oh, when should I sell options as opposed to buy? You're in a situation, look, if you want to get bullish, you got to sell puts. I mean, as far as, on a relative basis, bang for your buck, risk reward, all that kind of stuff. Because, if you get one of two worlds, you either A, get a volatility crush and the stock goes nowhere, you'll still make money. And if the stock goes up and you get a volatility crush, you'll make money twofold or that much faster. Or either or, right? So it goes up and you don't really get a volatility crush, you still make money, right? Again, so kind of putting two of the three scenarios in your favor that you can make money, giving you a better probability to make money. But outside of that, there's nothing else on here that looks remotely interesting. I was going through the list last night and kind of rubbing my head. The one stock that I kind of like here, but it's a piece of shit, is Alcoa. It's kind of a crappy stock to trade. I don't like it. I never have. There's a $35 stock, an IV rank of 100. I don't really know what to do in here. Possibly, maybe the play is you do like a June, covered call, maybe. If you do the 35, if you buy the stock and you sell the 35 call, put your cost basis at $29.90, gives you about 54 deltas. I mean, I looked at that. I don't know if I even like that trade. I don't know if I want to use $1,300 on this piece of shit. It's not really a lot of money, but it's enough that I don't know if I want to tie up $1,300 in this thing, because the likelihood of this really, I don't know. It's a crap stock. It really is a garbage stock. I mean, look at it. Look at it. It's kind of a garbage stock. And it's moved over time. I mean, I have to say here, like it bottomed out here. We had a nice rally. Took a while. But it's been in a sell-off just like everything else. I'm not sure if it's bottom though. I mean, to me, it's probably more likely to bottom around 28, which, hey, you're never going to time it right. But at least if I do this, right, I'm looking at a bottom at 28. My cost basis in here is almost 30, so that's not too bad. So, I don't know. I was kind of looking at that for in here, and then I was saying, like, do I sell maybe the 35 put and just sell it naked? That's a possibility, but again, I don't know if I really like that trade overall. This stock has a tendency to not move very fast. But I'm throwing that out there. I mean, these are just some things I'm kind of having a war with in my mind. I feel like I have to do something in these stocks. And that's why I'm actually going over it and the reason I feel like I have to do something, when you have an IV rank, at 100 on a stock like Alcoa, you have a lot of propensity, to make money here. And as I said, the same reason why you can make money in Merck, you kind of have the double whammy. Like you can either get a really big volatility crush, or the stock can actually bounce and go up, and in addition get a volatility crush. The likelihood of that happening in a stock like this, especially it being cheaper, you usually don't see too many stocks in the 30s on here. That are somewhat tradable, but like AT&T, I call it telephone, but AT&T, the stock is untradeable. I'm sorry, it's untradeable. Unless you just own the stock, it's horrible. It's absolutely a horrible trading vehicle. I don't even know why it goes on this list. I guess because it has a lot of option volume, and so it does. But it is horrible. Same thing with Verizon. Another horrible stock to trade. It just doesn't move. for options, right? If you own the stock, it's fine, pays dividends, right? It's a whole different animal. But for options, it's just not a play enough to really. But in seeing this volatility, and again, all these stocks being under $50, kind of makes me think like maybe I should be doing something. But I just can't figure out what it is. And I really can't. I really can't. I mean, I need to sell premium in here if you're going to do anything. But what do you do? If I went to like a June, what do I do in here? Only thing I do is maybe sell a put. But am I going to sell a 24 put for 66 cents? Pfft, come on. Only thing in here you really can do is like maybe do this is what I would do if I was going to do AT&T, is just basically just get almost the at the money covered call. And if the stock does nothing, right, you make $130. If it goes down, you roll the call down, reduce the basis. If it goes up, it gets called away. Have a nice day. Forget about it, right? And that's it. But you got to use $1,100 to do that. And I don't know if I want to do that to make $130. Not. Just seems like there might be better things on the table. I was looking at Lulu. Lululemon is one of those stocks that I've always had a problem with, although it always looks juicy when you put it on paper, but then you start stacking it up, and it's not that liquid. I've had a lot of problems getting in and out of trades in Lululemon. I don't know what it gets ranked. Let me see. What does it get ranked on liquidity? It's only a 2-star liquidity, which I actually believe that. And then you could even see from the open interest, there's really not a lot of liquidity in this thing. I'm looking at the April options. But as much as that to be the case, this is another one that I kind of feel like I want to do something because volatility is so high and you have such heavy skew in here. Here's a strangle that looks really enticing to me. The 390, 250 strangle, bring in 789. Downside to this is that you're going to use $3,000, $3,200. This has a good probability of profit. It's a little delta negative only because there's probably a bit of, let's see, that's the 10 delta, and that is the 18. Probably because this is skewed a little bit delta-wise, right? Because we only have 10 deltas here on the puts, and we have 18 on the call. So it's going to actually have, on the short call, so it's going to have negative delta. If I were to make this a neutral, I'd have to come up here to probably the 260. Pretty close. 4 negative deltas. Wow, it wants me to go to the 270, which is right at the bottom of the expected move. And that is a delta neutral trade right there. That brings in $1,100. But the downside to this trade is I'm literally right at the bottom of the expected move. And they have earnings on the 20th of March. So I can't really do anything in there now with earnings out that far. At least I don't want to do anything. So there's Lululemon. And, as far as picking stocks, too, folks, I don't try to, I used to try and get my own list. And now, now it's not worth it. It's really not. I mean, Tasty has done a really good job of coming up with this high option volume list. And these are really all the stocks that you want to trade. And so sticking to this list, in my opinion, is you're going to at least ensure that you're in the most liquid underlyings available. Now, some are going to be more liquid than others, obviously. So you need to look at that because some of them, quite candidly, I don't think should even be I think there should be a list that's high option volume and with liquidity rating of like maybe 3 or better. That would be, my perfect list. And I don't know if there's a way to do that. I haven't really found a way to do that on the platform where you can actually create a list based on criteria. Maybe you could. I haven't really found one. If anybody knows of one, let me know. But I haven't found one. I know there's an API out there that they have available that I've played with a little bit that you can do that. But I just haven't had the time. It's Python based and everything else. I just haven't had the time to play with it. But to me, that would be the perfect list, would be, high option volume, IVR of whatever, high IVR, whatever you want to classify that, over 50, over 60. In a case like now where IVR is high on everything, I would probably want something over 80. And then again, with a liquidity rating of 3 or better. Preferably 4. 4 would be perfect. If you could have a liquidity rating of 4, IV rank over, say, 80, and on the high option volume list, that to me is a perfect list. Perfect list. All right. So anyway, that's kind of it. And I'm sticking to the list. I've stick to this list, God, for probably, I think I've been with Tasty for I think in 2001, it was actually 2000. I opened my first account with them. And so I've been using it pretty much ever since. I mean, I always love this list. Because again, if you look down this list, it's got all the movers: Goldman Sachs, Freeport-McMoRan, SoFi, ARK is even on here, Pfizer, Palantir, Adobe. You're going to get all the stocks that you're going to want. UAL, another one, Tesla, Apple. They're all going to be on here. So you don't have to go through and do all these screenings and everything else, and then get yourself all wrapped up in that kind of bullshit. Just stick to this. It's proven that this list is actually fairly, I would say good. Now, as far as like what you choose to do, right, is your own problem. But as far as liquidity and options trading and everything else, like most of the stocks on this list, do kind of trade as advertised, what I should say. So, I mean, other than like these, but again, you have to go and look at the liquidity rating before you do anything. So that's it. That's all I got. I mean, I'm hoping we can hold a rally today. I'd like to see the market up, at least close up. I don't even care about how much. I just like to see, and I don't really even want to see a face-ripping rally at all. I want to see consecutive days of neutral to positive action, meaning like, hey, we're down 10 or 15. Like yesterday, even though we were down 50 and on the S&Ps, it didn't feel like we were down 50. And those are the kind of trading days that I think we're in the need for. We haven't had any of those for quite some time. You can probably go back to even before 2020. I'm thinking like 2014, 15 type times when we had trading days like that, where we're kind of normal. I'm going to just call it a normalized trading day, where we don't have these just ridiculous days where we're up, 500 points, and it's just this like bombastic, ridiculous move to the upside, where it's clearly like institutions, the Fed, you name it, everybody and their mother is out there like in a coordinated effort buying everything under the sun. Which is, I just don't want to see that. Anyway, so that's all I got. Hopefully I'll be back again. I'm trying to find the time to do this. But I hope this helps. I know, like I said, I always feel the need to show my actual trades and my actual returns because, look, regardless of what anybody says, and I've seen plenty of it just like everybody else. If you really think that these guys who are out there in the La La Land, that they've bucked the trend, and look, they may have bucked the trend for this little go of it, but what are you doing now? And anything could show up on paper trades. Me, I'm transparent as hell, man. There's good, bad, and ugly in this, and to me, I'd rather share the ugly because you don't teach anybody anything by just showing them when you have winners. It's what you do with the losers and how you manage them and how you cut them is how this game is played. And it's not about following trades and all this other shit. It's about sticking to a system and, being committed to it. And don't be a dude.